Hey everybody, this is Scott Arnell, and welcome to this episode of the SRI 360 podcast, where in every episode I interview world-class, sustainable, and responsible investors, executives, or entrepreneurs who are driving positive change in the world while achieving market returns. And I do this in order to bring you the lessons that they've learned along the way from their investment activities and their experiences, and to find out what they are actually doing and how they are doing it so that you can have better insights into the different SRI investing strategies that are actually being done today and what they're actually doing right now, and doing it across many different asset classes. And hopefully, this will help you invest in a more purposeful way and to invest for positive impact for a better world through your investment activities. Today, I'm speaking with Radha Kuppalli, and that's spelled Kuppalli. And in this episode, we're going to delve into real asset investing, and we'll be focusing specifically on sustainable forestry investing. Radha is Managing Director, Impact and Advocacy at New Forests, which is a leading asset manager and institutional funds management business, providing forestry and land-based investment solutions through sustainable forestry investments. The company is headquartered in Australia, where she has been with the company since their early days in 2006. Radha has primary responsibility for New Forests' impact strategy, reputation, and brand. She has oversight of the sustainability, communications, and market research functions at New Forests and heads the company's advocacy and thought leadership strategy. Radha is a director of the board of New Forest Pty Limited, member of the company's executive committee, and a member of all of the company's investment committees. She is also a non-executive director for Timberlink Australia and Greening Australia, and chairs Greening Australia's investment committee. She has had a career of over 20 years focused on driving capital markets towards investing in climate change solutions and sustainable development. She earned an MBA and a master's in environmental management from Yale. She serves on Yale's advisory board at the Center for Business and Environment and is an associate of the Yale World Fellows Program. We will be having a far-reaching conversation today where we discuss Radha's education and early career, when after a time as a junior fellow in the Carnegie Endowment, she discovered that what she really cared about was the environment. Shortly thereafter, she ended up at Natsource, where she gained exposure on the ground floor of the startup of emissions trading and the carbon energy markets. And then later, while getting a degree at Yale, a professor convinced her to attend a guest lecture on nature and price signals and the role of environmental markets that was given by David Brand. It was a lecture which she was originally going to blow off, and she recounts how this 20-minute lecture completely blew her away, and she ultimately ended up joining a new company that David was forming that would eventually become New Forests in 2006, where she is to this day. So we start with the basics and speak about why investors are attracted to forestry assets as investments and the dynamics of the timber markets, how the regulated carbon markets in New Zealand, Australia, and California are actually driving value for forests as natural climate solutions. We talk about what's behind the increased investor demand for forestry investments. Radha then speaks about how they select investments, how they do due diligence, the financial and non-financial screens that they use, and how they construct their portfolios. She gives an overview of the California cap and trade scheme emissions trading system, and she talks about conservation easements, both of which are US-oriented schemes that are less well known here in Europe. We discuss major climate change risks in forestry and why so little capital as a percent is being invested into nature-based solutions, and we talk about a whole lot more. You can find Radha on LinkedIn and on the internet at newforests.com.au. I really had a great time speaking with Radha, and I think you will enjoy it too. And now, please meet Radha Kuppalli.
Yeah, wow, because you're American actually by birth.
I'm American, yeah. I'm from Virginia.
Richmond, Virginia, is that right?
Yeah, Richmond. That's right.
Born and raised there. And all your family's still there or not?
Yeah, it's my parents, my brother are there, my sister-in-law, and then I've got family up and down the East Coast, a bit in California, and I've got a lot of family in India as well.
Were you raised in a big family, small family?
Well, I've got a pretty typical nuclear family, so just me and my brother and my parents. I'm sort of classic big Indian family, so I've got a lot of first cousins, a lot of second cousins, both in the US and in India. And, first and second cousins are almost like your siblings. So I've got a quite big sort of extended family that I'm very close to.
And then you went to university in DC, right? An American university?
Yeah, I went to American. That's right.
With not one, but two bachelor's degrees.
Yes, I did a lot of AP courses in high school. So I went in with a year's worth of college credit. So it actually enabled me, instead of doing a double major, it actually allowed me to do like a double degree, actually. So I got a international studies degree and a bachelor's in economics as well.
And you did both of those within 4-year period?
Within 4 years, yeah. And I did a study abroad in Beijing. So it was a great 4 years.
Ah, okay. Do you speak Chinese?
I used to be able to speak like a sort of 7-year-old, and now I can speak like, I don't know, a 10-month-old maybe. I can do some very basic things, but not as good as it used to be.
So then you got out of fresh with your 2 degrees, and then you started as a junior fellow at the Carnegie Endowment. Is that right?
Yeah, that's right. It's a fantastic program that's been around for at least 20 years, but longer. It's probably 25, 30 years. So essentially, Carnegie picks basically about 10 students. You apply, 10 people who have just graduated from their bachelor's degree to come. And then so you apply, they pick 10 people from across the United States to be junior fellows. And so you get paired up with a program. So it might be the program that they have on democracy or on Russian studies or whatever it is that Carnegie's got its programs on at that time. And then you're essentially like a junior associate in that program, helping to, write papers, write books, do research, what have you. And I was part of a program on global governance, which really set me up for a lot of what I'm doing now. Carlos Lozata, who's now a Pulitzer Prize winning journalist at the Washington Post, he was an editor of Foreign Policy magazine at that time. And he's the one who set me up with my following job. And one of my fellow junior fellows, Brian Deese, is now head of the White House Council of Economic Advisors. So it's a pretty amazing group of people that you get to be with.
That was in Washington as well?
That was in Washington. Yeah.
And then you got set up in another job, and that was at Natsource?
Yeah. So Natsource was essentially an energy brokerage, energy trading firm. So they were trading energy derivatives, what have you. And at some point in the 90s, they started also trading pollution permits. So sulfur dioxide and nitrous oxide permits, which is all part of the acid rain program in the US. And then starting in the early 2000s, there was this rising interest in mitigating climate change, setting up carbon cap and greenhouse gas emissions trading systems. And so Natsource thought this is like the next big game. The next big market is going to be energy trading linked with carbon emission reductions. But there was so much need to understand the underlying policy. And then a lot of their energy clients were trying to understand, how does the Kyoto Protocol work? How do these different environmental markets work? And so they hired in a couple of ex-Clinton senior energy and environment people, and they set up an advisory business in Washington, D.C. And so I was one of the first employees for that group. Carl sort of set me up with someone who had just started, who was going to set up that business. And so I was really on the ground floor. This is back in sort of 2001. So I was really on the ground floor of the carbon markets at that time. And so the last 20 years, I've been engaged with climate policy, environmental markets, carbon markets. I'm sort of working around forestry now, institutional investment, but there's been this thread of climate and carbon throughout my entire career.
And was that serendipitous, or was that like a particular interest that you had prior to going into Natsource?
This was a 1-year fellowship at the Carnegie Endowment. And I was working on this book called Managing Global Issues. And each chapter was written by a different expert on different matters of international public policy. So nuclear disarmament or public health or environmental issues, refugees. And as that year was coming to a close and I was thinking, okay, what do I want to do next? I was really doing a lot of reflection on what it is that I really wanted to do. What do I care about? And it just really occurred to me that it's always been about the environment for me. I did a thesis on trade in the environment. I did a paper on women in the environment. I was looking at communications in the environment. And I suddenly just realized, I was like, oh, it's about the environment for me. That's what I care about. Yeah. And I think that harkens back to my childhood and spending a lot of my childhood in India. And it's a variety of reasons, but why? But I really care about environmental issues. And maybe it was prescient, but as a 22-year-old, I decided, well, the most important environmental issue really that's facing us right now is climate change. And I think that the only way that we're going to address climate is through business and getting kind of capital and business like focusing on climate solutions and investing in kind of a different future. And so I just made the decision, well, I want to work on climate issues and I want to work in the private sector on climate. And with the background in economics, I was really interested in emissions trading. It was something I learned about as an undergrad. And I just started to read about carbon trading. And so these were the thoughts that were swirling in my head. And then one day, Carlos Lozata popped his head into my cubicle as he was walking by. And he said, Radha, what do you want to do next? And I just said a few of these things to him. And he said, oh, that's interesting. My friend Rob Youngman, who he'd done his master's with at Princeton, said, oh, my friend Rob is actually starting to work for a company called Natsource. And I think they're doing kind of carbon emissions trading. And I went, oh my goodness, Carlos, I just read about them the other week. They're headquartered in New York, and I don't want to move to New York. So that's why I didn't contact them. But you're telling me that they're going to open an office in Washington. He said, yeah, they've just opened an office in DC. Let me put you in touch with Rob. And that was just that kind of sliding doors, just that kind of that moment, having a conversation. And it was just the right conversation at the right time. And
so then all good things come to an end. I guess you decided to go back to school, and you went to Yale. What brought you to the end of that and make the decision to go back to graduate degree?
Well, I like school. I knew that I wanted to get a graduate degree, and I'd been out for 3 years at that point. I just thought it was a good time to go to graduate school and had a good kind of work experience. And thought I wanted to do a master's in public policy. In the middle of the applications process for a bunch of public policy schools, I realized I have no desire to get a public policy degree and had stumbled across the website at the Yale School of Forestry and Environmental Studies, which is now called the Yale School of the Environment. And just went up for a visit and just really liked the students and everybody I met and decided to get a master's in environmental management. So seriously, Scott, it's like I think I sent in my acceptance letter for Yale Forestry School, sent it off. And then the next week I went, what am I going to do with an environmental studies degree? And then I realized that they had this kind of dual degree with the School of Management. So I applied for this joint degree with the management school to get an MBA. And that's what I ended up doing. I did a joint sort of environmental studies degree in the MBA.
So once again, not one.
2 degrees.
2 degrees. I'm starting to see a trend here.
The through line is I'm interested in lots of things, and I like this kind of multidisciplinary approach to solving problems.
So then you got out of Yale, and then you started at New Forest. But I have to ask you, did you get 1 or 2 jobs?
I've been here a long time, but I think this is my 4th role or something. But
you only did 1 job at a time.
Only did 1 job at a time. But it was also a sliding doors moment as well. David Brand, who's our founder and CEO, he had come to Yale to do a guest lecture, like my first month, I think, of my program. I think October 2003. And he had come to give a talk on pricing nature and kind of having market signals for carbon, biodiversity, and water. The fact that we destroy nature because we don't value it. He'd been invited by a professor, and I almost didn't go to the lecture because I thought the Kyoto Protocol was failing, carbon markets were failing, and I thought, oh, this guy's not going to teach me anything I don't already know. And this professor said, no, you have to go listen to this guy, David. He's really interesting. And I went, and this like kind of 15, 20-minute lecture like completely blew me away in terms of it made me think about nature and price signals and the role of environmental markets in a completely different way around land use. And and here we are like 17, 18 years later. I'm still working for Dave.
Does he know this story?
Yeah, definitely.
He knows that you thought like, oh, what's this guy going to say?
Yeah, he does.
If he doesn't, he might know.
In fact, he's taught me lots and lots of things.
And you started there, and you're still there. So that's not very common.
Yeah, I started as an intern. I think I got an internship with him at a former, not New Forest, the current version, but a kind of a prior version of New Forests. And I did an internship, and we just really hit it off. And then after I had 2 more years of my degree, I finished my degree. And in the interim, Dave did a management buyout, created New Forest as an independent company. And so I started in July, full-time, sort of July 2006.
Right. And if I recall correctly, you started or were in on the start of the US company. Is that right?
Yeah. So I basically I went to Sydney for a year because the company started in 2005. I was there in 2006. So we were really in startup mode. So I spent my first year as kind of a business development. We were raising kind of third-party capital, going on road shows, doing that kind of thing, doing different kinds of business development activities. And in the background, I was writing a business plan. And so I wrote a business plan for a US kind of environmental markets investment business. And so then I went to DC in March or April of 2007 and started our US business, which has evolved, has kept this kind of core focus on creating value through forest and land assets through kind of environmental markets. So at the time, I raised a sort of $100 million, what's called eco products fund that was investing in what's called wetland and stream mitigation banking, essentially selling stream wetland biodiversity credits into kind of to public and private developers of land to offset their impact. These are all regulated markets in the US. Some early kind of pre-compliance California carbon trades, did some kind of couple of interesting deals internationally as well.
The company started though in Australia. Is that correct?
In Australia, yeah, we're an Australian business. Yes, yes. But we have a headquarters here in Australia. We've got large assets under management in Australia and New Zealand. And then we have a business in Asia and business in the US.
And then you moved back to Sydney and were Director of Investor Services. Is that correct?
That's right. I ran the US business for about 5 years or so. And in the meantime, we started raising significant amounts of institutional capital for sustainable forestry investment. And we needed someone to kind of lead the client business, to have someone who was really just dedicated to raising capital, doing client reporting. But also in my investor services business unit, I was overseeing capital raising, client reporting and client relations, but also developing our strategy around sustainability, all of our social and environmental management systems, our whole ESG framework, and also leading advocacy, thought leadership work as well and supporting all of that.
So in that role, you're much more on investor side and fundraising and not on the investment side.
The investment side, that's right. That's right. Yeah. So I was really part of that corporate platform. So in taking on that role, I came back to Sydney. I'd also met my now husband here as well. So all roads were pointing back to Sydney. Yeah, so it was all kind of like serendipity. The universe delivers. You put it out there, the universe. So it's been nearly 10 years now, for 9.5 years.
Okay. And then it seems like you morphed into Managing Director of Investor Services. Was that essentially the same role?
We formed a full suite executive team. I'm part of the executive committee of New Forest. Right. I think I was like a director, executive director, then managing director, but it's essentially the same role, increasing formality in the role as an executive team member. And that brings with it other governance responsibilities.
You have a number of active professional association roles that you've been on or involved over a period of time. And my point in asking you about this is to underscore that you're sitting on these boards or working groups representing a very large investor. Everything you're going to tell me comes from someone who's quite a bit in the flow and is representative of what the current thinking is on sustainability in the forestry investment space. And maybe you can just tell me what groups you're on and what these groups are trying to achieve.
Yeah, sure. The 2 board appointments are relatively recent. So I'm on the board of Greening Australia. Greening Australia is a land conservation restoration organization. It's a nonprofit, but it's been around for over 40 years in Australia. But steadily, greening has been moving away from sort of government and philanthropy-driven land restoration and towards more engagement in carbon markets, environmental markets, biodiversity markets, funded by private sector corporate interests, as companies also seek to align themselves with better environmental and social outcomes. So I was brought onto the board to bring my specific asset management background, carbon markets expertise to help shape the future direction of the organization. You think about Australia, like the business model of the country has been digging up rocks and dinosaurs and sending them overseas. But in fact, Australia is so well positioned to be a renewable energy leader, but also a leader in land restoration, which is really exciting and what I care very deeply about. And then Timberlink is a portfolio company of New Forests. It is a wholly owned investment of one of our funds. So it is a timber processing business with a couple of mills in South Australia and in Tasmania. It is now one of the largest timber processing businesses in Australia. It's got significant market share in the key markets in the country. And one of the interesting things about Timberlink is that what the business is going to look like 10 or 15 years from now is very different from what it is today. So today, the core business is making 2x4s and building sticks to make residential or commercial construction. But we are investing very heavily in mass timber, so cross-laminated timber, glue-laminated timber, really these new and interesting engineered wood products for the building sector. And again, as from a new forest perspective, when we think about what's the role of the forest sector in the transition to a sustainable future, one part of it is the land piece. So forests as providing climate mitigation, biodiversity, sustainable built. But the other piece of it is timber as a sustainable material that is going to provide us with sustainable building materials, more sustainable fabrics, more sustainable products, and really substituting for polluting and inefficient use of fossil fuels. So those are the two pieces of the puzzle. It's the natural climate solutions and it's the bioeconomy piece. And so part of me coming onto the Timberlink board was to bring that sustainability focus and background into that board and bringing that more heavily into the strategy of the business. And then finally, the Center for Business and Environment at Yale, I've been in a sort of founding advisory board. My cohort, when I was there at Yale, we essentially helped found that center. And then I started on the advisory board after I graduated. And it's a joint center between the environment school and the business school. And it's really grown incredibly over the past 15 years. It's my way of remaining engaged with students, remaining engaged with what people are thinking about right now and trying to impart any content or career wisdom that I can help with. I've realized now that I'm one of those people, I've gotten old enough now that people are asking me for advice. And I went, oh, wait, have I been here long enough now that I can give people advice? What?
Your advice should be easy. Get 2 degrees, do 2 of everything.
Be at the right place at the right time.
All right. Maybe you could give me a high-level introduction and overview into New Forests.
So New Forest was founded in 2005. We have approximately $5 billion US under management, covering about 1 million hectares or about 2 million acres of sustainably managed plantation forests, conservation areas and natural forests, timber processing, a little bit of agriculture, and I would say carbon projects across that global portfolio. So we're an institutional funds management business. We have very large blue chip institutional clients, so public pension funds, some private pension funds as well, some insurance companies, some sovereign wealth funds. So most of that capital is coming out of a few places, so Northern Europe, the Netherlands, some of the government pension funds of Sweden, Denmark, the UK, Germany. We also have some very large Canadian clients as well, and then a bit out of the US, some other European countries, and a little bit out of Australia as well. The bulk of our clients, these are large investors who are writing $50 to $200, $250 million checks as they invest in our funds. So these are investors who are looking for exposure into real assets. When they're investing in real assets, they're fundamentally looking for a low volatility of returns. They're looking for steady income. And forestry in particular is quite interesting because you've got a biological asset that grows. And as it gets bigger, it actually gets more valuable. So it's unique as an appreciating asset. And typically, because you've got that biological growth, it tends to be a bit lower volatility of returns because of that underlying biological growth. And when you have mature forestry assets like you do in the US, as well as in Australia and New Zealand, we've got plantations that were planted 20, 30, 40 years ago. They're now mature and it's like a tree farm, right? So you've got steady income. So that's the underlying rationale for why has forestry emerged as an asset class alongside other real assets like real estate or infrastructure and increasingly agriculture. So the thing that differentiates New Forest and what makes us pretty unique is 2 things. So the first is our focus on the Asia Pacific region. And I think the second piece of this is sustainability as an underlying driver of how we develop our products and our strategies and execute. So first on the Asia Pacific side, one of the things that's really happened over the last 15 years is that the US and Europe together are not collectively the center of the universe in terms of timber demand. China became a net importer of wood products in roughly 2008. And so you've seen huge demand from China, both for domestic consumption, but also for its export industries. But not only China now, but also in Southeast Asia. Vietnam is now this significant manufacturer of furniture to export back into the European and American markets. And timber demand is also very highly correlated with GDP growth. And so you can see as these middle income countries get wealthier, you have younger populations getting older. So you also see demand coming from those domestic economies. And that's also playing out in Africa and South America as well in terms of rising timber demand for domestic consumption. So when you look at that picture, we decided that we wanted to have two strategies in the Asia Pacific region. We have this series of funds that are investing in sustainable plantation forestry in Australia and New Zealand. Again, these mature timber markets where you've got domestic demand, but also strong kind of export economies into North Asia. And then Southeast Asia is pretty unique. We're the only institutional funds manager with a dedicated strategy to Southeast Asia. And the thesis there is that the history of forestry and history of logging in Asia has been unsustainable logging of natural forests. And so if we're going to meet the rising timber demand and meet our economic objectives, but also our environmental and social objectives, you need to see the industry really move into responsibly managed, certified, sustainable plantation forestry so that we stop deforestation of all of our remaining tropical forests and really concentrate on the sustainable landscapes where we're balancing sustainable production and conservation. And that's what we've been doing in Asia for well over a decade now. And then on the kind of sustainability piece, I think we've really been a leader in our approach to sustainability. So one piece of it has been around environmental markets. Myself, David Brand, other colleagues of mine, we've been involved for 20 plus years in environmental markets and have viewed for a long time that we need to develop investment strategies where we can monetize the carbon value or the biodiversity value. And we've experimented with that over the years, but certainly now you've got regulated carbon markets in New Zealand, Australia, California that are actually driving value for forests as natural climate solutions. And increasingly now with all of these kind of net zero commitments, we're really on the precipice possibly of the voluntary carbon market becoming very large in size. And that can really create value for greenfield development in emerging markets, ecosystem restoration. So that's been really a core part of how we have developed our products. But leaving that aside, we have been, I think, very progressive in terms of the impact frameworks we've developed for forestry. We're probably the first forestry manager who was putting out a sustainability report. So I think the responsible investment architecture and how we've talked about that and reported to our clients over these years, I think has also been pretty novel as well.
Help me understand. Are you a fund? Or do you have several funds? How is your business organized?
We have several funds, yeah. So essentially, we let our clients pick what markets do they want exposure to. So we typically offer commingled funds per region. So in Australia, we're just finishing the deployment of our third fund. So we had an Australia, New Zealand Fund 1, then a Fund 2, then a Fund 3. So these are commingled funds where investors are coming together. We've had one Southeast Asia fund. We're in the process of raising our second Southeast Asia fund, but we also offer separate accounts as well. So in the US, in fact, we've done more direct deals and have separately managed accounts for our institutional clients. So we're a fund manager and we've got our platform and most of the corporate services folks back office, we're all here in Australia. And then we've got investment teams in Sydney, Singapore, and San Francisco to bring the local knowledge and are doing the origination investments and managing the assets.
Is it basically the same business in different regions, or do you have different businesses?
Yeah, it's no different than any other asset management business, right? Like we're raising capital, deploying funds, we earn management fees, and we've got a performance fee against a hurdle. So I think that business model is essentially the same in all of the regions, but the strategies, of course, are slightly different because you've got the different flavor of a Southeast Asia strategy versus a ANZ strategy versus a US strategy.
And then on the responsible investment aspect, I believe you're a certified B Corp. Is that correct?
Yeah, from a responsible investment perspective, we use a number of tools, including third-party certification, like the Forward Stewardship Council. There's a variety of mechanisms that we use to ensure responsible investment at the asset level. New Forest, as a company, we're a certified B Corp, which means that we look after our employees, our customers, people in our supply chain. So that really looks at us as a company and how do we conduct ourselves.
So maybe some basics first, stepping back. Could you explain to me what's the traditional role of forestry in investor portfolios and the traditional attraction of the asset class? And then maybe you could go on to say, what are the non-financial attractions, perhaps on the social and environmental side?
Yeah, so the traditional attractions are some of the things I was talking about before. Forestry has tended to have a low volatility of returns attributable to the underlying biological growth. Forestry is an appreciating asset. So as it gets bigger, through biological growth, that actually grows in value. So that's one reason there's historically been low volatility of returns. It tends to be positively correlated with inflation. And again, I think that's tied to the fact that timber demand is correlated with GDP growth. Those have been kind of the underlying characteristics. It's a good diversifier. Also, there's not one timber market. You can get exposure to pulp and paper markets, construction markets, or housing. Increasingly, now there's an ability for, it's a truly now international asset class as well. It started in the US, but it's globalized. So it's a good diversifier. So those are kind of the core reasons. And so for most of our institutional investors, timber is sitting in their real assets or natural resources portfolio. Sustainability, if you had asked our clients like 10 years ago, why are you investing in timber? Those reasons I just mentioned, those were always the top one and top two. So low volatility of returns, correlation with inflation. That was the top two reasons. But the third reason, even 10 years ago, was sustainability. Investors saw here that you could manage assets with good stewardship. You could be investing in assets that had third-party certification. There's just this view that managed forestry assets were a nice thing from a sustainability perspective. And for our European clients, that was particularly important given the interests of their stakeholders and their pensioners and their members. The thing that has really accelerated in the past 24 months has actually been the sustainability piece of it. Forestry is increasingly viewed by institutional investors, particularly those who are members of the Net Zero Asset Owners Alliance or those who are taking on decarbonization targets. They're now looking for investments in climate solutions, and forestry is one sleeve of that. So they are looking at, how do I invest in forest as a way to decarbonize my portfolio? And what would that mean? How do you have to manage a forest in order to be climate positive? And so that could be everything from the kinds of strategies and the way you're managing assets to the inclusion of carbon finance and carbon credits in the underlying product and the strategy for that forest. Also, like the bioeconomy piece. How can forests contribute to new industries around mass timber and replacing fossil fuel-based products? So I think that's been a really significant shift. And increasingly, some investors are interested in emerging markets. We've had interest in Southeast Asia from institutional clients in a way that we haven't had before, because they also view that not only climate, but also the sustainable development goals. There's a real theory of change there in terms of investing in emerging markets forestry. And they have to get their heads around the risk return profile. I think that's the challenge. But one of the unique things that we have is a track record.
Is there substantially increased demand in the last 24 months?
There's always demand for those heavy, mature, cash-yielding assets. There was an asset that just went for sale. One timber manager was selling it. It was end of fund life. This was an asset in South Australia. And we were bidding, as well as some other investors. And it was very hotly contested. And in fact, AXA, investment management, AXA IM, bought that asset for over $700 million Aussie, well above what we were bidding for it. And because I think that what they said was that they were viewing that it's a part of a sustainable forestry, climate solutions kind of portfolio. And this is their first investment in forestry. There's always demand for these heavy assets, but the new thing is new demand in the markets that were already attractive. You're seeing new entrants like the Axes of the world. And then in the more niche strategies, like our Asia strategy, or in the US, we're managing forests for timber and carbon, we're seeing investors raise their hands and say that they're interested in a way that they haven't before. And then there's a whole new set of investors coming to the table as well. So we have corporate investors who've taken on net zero targets, who are now looking at investing in the underlying real asset because they want to essentially get exposure to the climate benefit. So yes, I would say that there's increasing demand in a variety of ways.
I guess I'm trying to get my arms around, is it increased investor demand because of increased global focus or interest on growing trees, or is it increased demand for emerging income streams resulting from what's happening in the marketplace?
I think it's both.
Selling wood products. You got Amazon Prime shipping boxes everywhere. You've got cross-laminated timber displacing steel in construction of high-rise buildings.
I think it's both, Scott. Timber has had some poor performance in the U.S. If you look at what's called the NCREIF index, there has been some poor performing U.S. assets. But I think that's on account of the fact that you've had some managers who have bought high and sold low at the end of 10 years. Yeah. Because the underlying fundamentals of timber and the underlying fundamentals of the forestry asset class are very sound. So a lot of this just comes down to like, did you buy it for the right price at the right time? And so I think there have been some, particularly US institutional investors, who got turned off of the asset class because of some of the poor returns. But I think for those investors who like forestry, those market fundamentals are always there. And that's a core source of comfort. And I think now there's this view that, oh, there's a new value here. There's carbon. How do we monetize that? How do we think about that? What does it mean for my own climate balance sheet, as well as a new source of income?
Yeah, so I guess at one level it's not correlated because trees grow every year no matter what the economy is doing. But on the other hand, with some of these new uses of timber or new demand, it somehow is correlated to what's going on
of course
in the global economy.
The unique thing is that, so let's say you've got a downturn in the timber market. So like we just weathered that through COVID, right? Chinese demand really fell off and prices go down. It's not like a watermelon where you like have to harvest the watermelon. You can leave the tree on the stump and it grows. It gets more valuable, in fact. So it's this trade-off between capital appreciation and income. When you're thinking about the total returns, it's capital appreciation and income. That's what you're managing for. And so it's really important what you buy the asset at, what price do you buy the asset at, and your forecast for your log price and whether you get it right or not.
Yeah.
That determines a lot of what your return is.
Can you somehow explain to me in a way that kind of makes it real what kind of approach or your process or methodology in terms of investment selection, your due diligence, your financial and non-financial screens? How do you construct your portfolios?
So if we take Australia and New Zealand, which is where the bulk of our assets under management are, so we will raise a fund that has a hurdle rate. Historically, that's been between 6 to 7% real rate of return or 8 to 9% nominal. That's essentially where forestry in Australia has been. That's something that we set with the investors at the time of raising the fund. And so we're essentially trying to get a series of market exposures. So, for example, in Australia and New Zealand, you've got 3 key markets. You've got an Australian softwood market, so we're growing pine trees, which pretty much are all consumed for the Australian domestic construction industry. We're growing eucalyptus trees, and that's being sold as hardwood chip into the pulp and paper industry in China and Japan. And in New Zealand, you've got, again, sort of softwood logs, the bulk of which are exported up into China, India, Korea for their industries. And so essentially, we are trying to get a balanced portfolio of market exposures across those 3 markets. And of course, it's different if you're in Asia or the US, the markets that you're trying to get exposure to. But fundamentally, it's the same thing. We're trying to get a balanced set of market exposures and trying to achieve this hurdle. So our due diligence process is assessing the quality of the forests. We're conducting inventory, trying to understand what there is in the forest. We're forecasting log prices, what's going to happen in the future in the different markets in which we're going to get exposure to. And essentially, you're doing a discounted cash flow analysis. And these are complex biological assets where you are looking at biological growth as well as having the underlying financials associated with it. And the environmental screen really comes into play in different ways in our different regions. So we have a social and environmental management system that governs our whole global portfolio. So really sets criteria around third-party certification. We get third-party certification across every single asset that we own. And so that's like the baseline for performance. So we have a preference for what's called the Forest Stewardship Council or FSC certification. That's our kind of preference globally. We may deviate from that and use something else where appropriate. New Forest has a performance framework that we call our Sustainable Landscape Investment Framework. So we're essentially measuring kind of the performance of our assets against productivity. How much certified sustainable timber are we producing? Looking at land use. In our 1 million hectares of assets that we manage globally, about a quarter of that is actually natural forest and conservation areas that are integrated into the management of our landscapes. So we have a quite significant conservation part of our business, and we're working very closely with NGOs and like local environmental groups and stewardship groups to kind of ensure that we're meeting local biodiversity and conservation objectives. But we're also looking at shared prosperity with communities, measuring our employment benefits and gender diversity in employment, safety issues, and also governance and risk management. That forms the overall picture of how we manage assets through the entire life cycle from acquisition to exit. And then the interesting thing is we get these unique opportunities in the particular regions. So if you look at Asia, where environmental and social issues, community issues, those are integral to successful management of assets. We have communities in and around all of our plantations. So really doing a deep dive environmental social due diligence at the beginning of the investment is really critical and forms a huge part of the management activities over the life of those assets. And in fact, in the new fund that we're raising, we integrated a blended finance structure. So we're actually bringing some impact capital that is concessional equity into the fund in order to enhance our ability to invest in climate, community, biodiversity outcomes, because we view that as really essential to performance. In the US, for example, we have what we call a carbon forestry strategy, where we're underwriting assets looking at the timber value as well as the ability to manage assets for carbon and sell it into the California carbon market. And again, like that's a very unique proposition where we're having to do very complex geospatial analytics, carbon modeling, biological modeling to look at the full value of that asset from a timber perspective as well as a climate perspective.
You've mentioned that you have 3 major regions, the US and Southeast Asia, and then Australia and New Zealand. Is your approach different in each one of those regions?
The underlying investment process is similar, right? So you've got a fund, we have an investment hurdle, we've got an origination process, you're doing just cash flow analysis on assets. But yes, the approach is slightly different in that you're facing different sets of issues in each region. In the US, we have this strong focus on selling carbon into the California carbon market. We're investing across the United States. We do have some assets in California, so you've got wildfire risk, so that becomes a really important part of due diligence and thinking about management of assets. We've got these environmental and social issues in Southeast Asia, so that becomes hugely important to due diligence and the shaping of the product. What's our environmental and social policy? What will we do? What won't we do? In ANZ, it's quite mature forestry assets. Here in Australia, you've got a lot of land use competition. Forestry competes with agriculture. You've also got a rising carbon price. So you're really thinking about what do you do with this piece of land? Is it forestry? Is it agriculture? Is it carbon plantings? So they're really unique sets of issues dealing with land and people, kind of various commodity markets.
For example, in the US, you referred to carbon finance. Can you introduce or explain what the carbon finance mechanism is? Because I believe this is mostly in the US is a thing, right?
Yeah, so there's different carbon markets in different parts of the world. We've got exposure to climate finance or carbon markets in all of our regions. Yeah. It's played a particularly significant role in the US. So California, approximately 10 years ago, introduced a cap and trade scheme or emissions trading system as a way to enable California to meet its 2050 emission reduction targets. And so there are emitters in California, their emissions are capped and they reduce over time. So forests across the United States are able to enroll particular forests, but it's not just limited to Californian forests. Forests across the United States have the opportunity to be enrolled in the California carbon market and to sell credits to emitters who may meet their emission reduction obligations either by owning emissions allowances from the state of California or buying carbon credits. And effectively, this California Forest Carbon Protocol has created value for certain types of forests in the United States, particularly those forests in Northern California, the Pacific Northwest, Appalachia, the Lake States, where you have these semi-natural forests that can be managed on a sustainable basis. And without getting too technical, forests that have historically been managed with a light touch, that haven't been harvested very aggressively, and that have carbon stocks that are higher on average than those in the region in which they're located, can monetize that kind of high carbon stocking. And then if they grow their forest even further and further enhance the carbon stocks on their forest, that growth in carbon sequestration can also be monetized. It really creates this incentive to maintain existing high carbon stocks and make sure that those forests are not harvested. That carbon stock, it makes sure that it's protected for 100 years. There's these 100-year liabilities. So it makes sure it ensures that carbon is protected, and it also creates an economic incentive to further expand the carbon stock of these forests. And so you're actually able to continue harvesting the forest as long as you maintain a certain level of carbon stocking. So it really creates this optimization problem where we can manage forests for sustainable harvesting of timber, as well as climate mitigation outcomes as well.
So it's a whole separate revenue stream then.
It's a new revenue stream. Yeah, that's right. We've estimated that it can not only create these climate mitigation outcomes, but on average could add 200 to 400 basis points above a timber-only management approach.
And then I have another similar question. I think it's also US oriented. It's conservation easements, wetland and endangered species banking programs. Can you say a few words about that? And is that the same sort of thing that increases returns?
Yeah, conservation easements are a particular kind of US instrument where you can basically forego the development rights on a particular property or forego certain kinds of timber harvesting that paid for that opportunity cost. We look for opportunities to sell conservation easements where possible, and we have done that, especially in Northern California. There's a lot of opportunity to do that because of the particular high quality habitat. Interestingly, we just completed a transaction in April with an indigenous group. We registered the very first ever California carbon project back in 2014, and that was with the Yurok tribe of Northern California. So we've had a long relationship with the Yurok. And in a recent transaction, we've been managing a forestry asset on behalf of one of our European clients. And we identified a particular parcel of land that was under ancestral ownership of the Yurok tribe and has particular cultural value for the Yurok. And so we knitted together a transaction where we worked with the Trust for Public Land, and they were able to secure financing for the conservation easement and brought that for the Yurok. And then we were basically able to rematriate the land back to the Yurok. So it created a great economic outcome for our client, as well as, meeting the economic and cultural objectives of the Yurok. So we're really proud of that transaction back in April.
Do you always consider social impact, and are you always measuring social outputs?
Absolutely. The engagement that we have with communities is incredibly important. You need to have that social license to operate. And as I mentioned, in Asia, you can't go anywhere without running into local folks and villages. And in a place like Asia, you've got a history of unclear land tenure in some of the areas in which you're operating. I can give you an example in New Zealand. We purchased a very large forest estate in the North Island of New Zealand a couple of years ago. It had been owned by a company that had not really paid attention to its forest management. And forestry in New Zealand is basically done on these extremely steep slopes. And you have trees that are planted like up here. And so you have high susceptibility to erosion. And so there was this massive storm event a couple of years ago. And so all of this timber debris washed into the local river, damaged people's homes. It was just terrible. And so when we bought the asset, we really undertook an extensive process of engagement with the community, engagement with local people, So not only did we have to change those forest management practices and reduce the susceptibility to erosion, and we partly did that by giving some land back to conservation and just saying, look, we're not going to harvest in those areas. Let's just put it back into conservation. But also we had to have a conversation with the local communities to say, look, this is what we're doing. And this is how we're going to manage these issues and make sure that you're not in danger. And in fact, when we had another storm event about a year after we bought it, one, the impact was less, but secondly, people also knew that we were serious about how we were going to manage any cleanup and what have you.
Could you explain how you view the major climate change risks to forestry?
So certainly fire is a huge risk in parts of the US, here in Australia. And historically, we were buying fire insurance, wildfire insurance. So now you look at the US, there's not one company that offers fire insurance, wildfire insurance in the US.
Oh.
Our premiums in Australia, you can still get it. The premiums have gone up probably like 50% in the last 2 or 3 years. You spend a lot more money on management and prevention. You have to look at new ways of doing self-insurance and what have you. And then, of course, you have to be thinking about how do we price this and how do we think about catastrophic loss? And that's a really important conversation that we have to have with our investors who are investing with us in these regions. And we're in the process of we're undertaking a TCFD-aligned analysis of climate risk and opportunities across the entire global portfolio. And of course, fire is an issue, but if you look at emerging markets, we have an investment in Laos. If you have more flooding events, there's an opportunity to wash out infrastructure and roads. And so we have to be thinking a long term about how do we think about developing that infrastructure and spending money on that infrastructure to make it more climate resilient. So certainly the physical risk is one piece of this. And then you've got also the opportunities like around carbon markets and what have you. These are the two things that we'll have to grapple with increasingly in our products.
The role of sustainable forestry in climate change mitigation is obvious and talked about, but I think it's 30% of the solution, but only roughly 3% of capital is being invested in it. So why is so little capital being invested into nature-based solutions?
I think it's from an institutional investor perspective, forestry is still a pretty niche asset class. And most of the capital has been invested in the US, Australia, New Zealand, a bit in Europe, a bit in South America. So it's really been more of like an asset class in mature markets. But if you look at what actually needs to happen, what's the land use transition that needs to happen in order to get to our Paris Agreement climate targets? It's a couple of things. One is stopping deforestation, particularly tropical deforestation, which is roughly 10 to 15% of total global emissions. So one, how do you make that investable? And so these markets for REDD, reduced emissions from deforestation and degradation, REDD has been a very fraught public policy discussion over the past decade. It just hasn't been made investable yet. And the other big thing that needs to happen is we need something like 600 million hectares of reforestation, most of that in emerging markets over the next 10, 15 years. And that's a very complex proposition because we're going to be dealing with hundreds of millions of family farmers. We're going to be dealing with emerging markets. We're dealing with land tenure issues. Even in a place like Australia, you're going to be dealing with land use competition where we're going to be trying to figure out, do we use this land for forests? Do we use this land for production forestry? Do we use this land for agriculture? We know what needs to happen in the energy transition. It's just a matter of getting the capital flowing there. The transition that's required in land use is much more complex. I think increasingly the investment appetite is there, but now we need investable solutions. And that's really the crux of the problem that we need to solve.
Do you need to come up with these solutions? Who's going to come up with this?
It's all of the above, right? So we are part of the solution. So I think certainly we're demonstrating how do you successfully invest in emerging markets. We're demonstrating how do you successfully invest in regulated and voluntary carbon markets. We're demonstrating the value of new technologies and new mass timber markets. So our job and what we're doing from an advocacy perspective is also bringing those case studies, bringing that voice to the industry groups that we belong to and showcasing that. So what we can do by demonstrating how things work is to try and attract more capital into the sector. But there's a really important role to be played by government. Ultimately, here we're talking about public goods. We need robust climate policies. We need strong carbon pricing mechanisms and price signals because a lot of the carbon markets right now, they're just tinkering on the margins. But if you get to a world with a $50 per ton carbon price, timber becomes a bycatch. And the underlying economics is actually the climate mitigation. Like you're planting forests and managing forests for climate mitigation. So you don't even need a $100 per ton carbon price. Even 50 starts to really transform the underlying economics of land use. That's a public policy problem. And then the third piece of this is really about civil society and the NGOs and what have you. There's this extraordinary fight that's going on and has been going on and it's heightening. Like everyone knows that it's not just the energy problem. We have to solve the nature problem on climate, but there's a lot of battles happening around permanence and what happens if your forest burns down. And is this really just a get out of jail free card for the oil and gas folks? And there's a lot of these civil society debates going on in the background, which really have the real potential to clear the pitch away from more financing and actually just find companies go, you know what? Too much risk, too hard, reputation risk. I'm going to just go figure something else out. And in the meantime, we haven't solved the nature problem. So those are all of the pieces of the puzzle that not just us, big funders, the big philanthropists, the UN, the big NGOs, that's what everyone's trying to come to grips with at the moment.
Climate change is not just about carbon emissions and temperature rises, but also the risk of biodiversity collapse. So my question is, how do you balance the need to deliver financial returns to investors using commercial forestry with biodiversity and ecosystem recovery? Because I guess somehow planting non-native commercial forestry does not necessarily represent ecosystem restoration or biodiversity.
Like I said, out of the sort of 1 million hectares in our portfolio, about a quarter of that is actually natural forests and conservation area. So oftentimes we end up acquiring those areas as part of a broader landscape of production forestry and kind of conservation areas. And we have plenty of case studies and things that we've done. We're essentially a good steward of the land, working with local environmental groups. You're trying to achieve local biodiversity objectives. You're working on recovery of certain species. And so we have actively worked to do that across the global portfolio. But ultimately, we need more mechanisms. As you rightly noted, we need more financing mechanisms to draw capital into more biodiversity enhancement. So there's a couple of ways that we've tried to do that. In the fund that we're raising right now for Asia, we've introduced this blended finance concept. So about 85-90% of the capital is just going to be mainstream, commercial rate of return capital. And then we're bringing in impact investors who will take a concessional rate of return. And it ends up augmenting the cost of capital of the fund by sort of 50 to 100 basis points. And what we've said is that by virtue of the fact that we've got some of this concessional equity coming into the fund, in exchange for that, the fund will invest a portion of its committed capital into non-revenue generating impact activities. So ecosystem restoration, habitat connectivity, forest conservation, but also community programs like outgrower schemes and developing agroforestry programs. And that has had a really positive response from mainstream institutional investors. Like they want to invest in the fund because of this blended finance, because they view it as a way to kind of balance their objectives. But also from a carbon perspective, it's really important, especially as we think about the development of this voluntary carbon market, that we get higher prices for those projects that have co-benefits for communities and biodiversity. If we're paying for $5 a ton carbon, garbage in, garbage out, it's not until you get to higher levels of carbon pricing that we can actually get those kind of ecosystem benefits that we need to see, and get more and more of the projects coming from native habitat regeneration, native ecosystem regeneration, which is what Greening Australia is trying to do.
Who are these impact investors? Are these like IFIs or DFIs, or are these actually private?
We co-created that blended finance structure with the Packard Foundation. The fund is still yet to be closed, but the interest is coming from obviously Packard, but also a corporate investor and some government capital as well. It's really fascinating actually to see the mix of investors interested in actually going into the concessional equity tranche.
But are they invested pari passu, or are they like first loss?
We decided not to do first loss. The way that we've structured it, basically, without getting too technical, the waterfall of distributions is predominantly going to the mainstream investors. And so the mainstream investors would be expecting like a 12 to 14% expected return. And for the impact investors, it'd be more like 4 to 6% return.
Right. And at conference, your CEO, David Brand, reminded an audience that when New Forest started, which was back in 2005, there was no iPhone. Yeah. People read newspapers, which is of course important to forestry. I guess the backdrop of technological change, do you have any view on what role the evolution of technology will have, both on sustainable forestry and other nature-based investments in the future?
I think there's a whole range of technologies that are going to be really impactful. So just to name a few, so certainly from a geospatial analytics perspective, has a real opportunity to drive down the cost of forest measurement, forest monitoring. So if we think about how do we want to scale up carbon markets, even being able to have things like remote sensing and remote sensing driven protocols around that, stopping deforestation. There's a huge role for geospatial analytics to play in terms of assessing, measuring, monitoring kind of outcomes on the ground. The whole area of fintech is like pretty interesting as well. We've had lots of conversations with people recently about how do you tokenize biodiversity and enable people to support projects on the ground through blockchain and kind of tokenization. And some of that work is now floating its way into kind of new carbon trading platforms and what have you. There's interesting kind of drone technology now where people are shooting seedlings out of drones to try to do like large scale reforestation. And some of that technology is getting better and better. And then certainly the whole area of a bioeconomy and sort of plant-based materials, wood-based materials, substituting for fabrics, different kinds of bioplastics, making new kinds of materials for cars, buildings. I mean, we're really excited about all of that.
If you had to name the one most important challenge in the sustainable real asset space at this time, what would it be?
For us, the central challenge is just driving more capital into emerging markets.
What do you know now about sustainable investing and impact investing that you wish you knew when you showed up at New Forest in 2006?
Asset allocation is everything. And I'm constantly trying to think through and work through how do we come up with new ways to help our clients and investors understand the value of the asset class in an asset allocation framework. So I think that's a central challenge. Like we tried to raise a mitigation banking fund and just no one knew where to put it. And we had to shelve it after a year or two.
At cocktail parties, we always like to talk about the great investments we made. But was there ever one that you made that, you don't have to name names, but that ticked all the boxes, you were convinced this is the right thing to do, and in the end it didn't turn out?
It was actually a high risk investment, but in that eco products fund that I raised and managed, the first US fund, we did a biobank. It was called the Malua Biobank, M-A-L-U-A, Malua Biobank in Sabah, Malaysia. And essentially we were trying to monetize the biodiversity value of this incredible rainforest in Sabah and sell these kind of biodiversity conservation certificates. So it's essentially like a voluntary biobank, and we wanted to sell the biodiversity value into kind of the oil palm supply chain. Yeah. And it was very well structured as an investment, as an asset, but the demand, of course, was like completely untested. And we spent years and a lot of social capital with the government of Sabah, and it ultimately wasn't successful as an investment. But we learned so much about taking a risk, how the challenges with voluntary demand, but how to structure kind of these innovative investments. But frankly, in some ways, we were just 10 years ahead of our time. You were talking about the question about technology. Yeah, there's plenty of people who are trying to do that now. Like they're trying to tokenize biodiversity. They're looking at new ways of kind of financing these kind of biodiversity conservation projects. So I can go, okay, we were ahead of our time, but the structure was actually fundamentally sound. And if we were doing that now with the technology that we've got now and in the context now of what people are valuing, maybe it would have been successful investment. So I don't know if I answered your question exactly the way you wanted me to answer it, but that's probably what came to mind for me.
And then just quickly, the converse of that, was there any investment that either you made and were skeptical about or actually passed on it And in the end, it turned out to be much better than you had expected, and you were glad you invested, or you wish you had.
Our sawmilling business, there's a joke in the forestry sector, which is like, how do you make a small fortune? And the joke is you take a big fortune and then you invest in a sawmill. And anyways, but we actually bought this business, which is now called Timberlink. And there's 2 sawmills. The company that owned them was going into bankruptcy. But these 2 mills were the primary customers for 2 forests owned by one of our funds. Yeah. And so we had never operated a sawmill before, not done any of this, but we took the risk and we said, like, we were very nervous about it, but we thought defensively, this is the right thing to do because there's one forest. So to protect the value of the forest, let's buy the mills. And we bought those mills for $40 million, and now they're worth hundreds of millions of dollars.
Oh, there you go.
So good investment. Yeah. And we had some clients who were very skeptical, who didn't want us to do it.
Yeah, I know this similar joke in the entertainment industry. It's, do you want to know how to make $10 million making movies? Start with 100 million.
Yeah, exactly.
I'm going to let you go. You've been very generous with your time, and I've learned so much, and my hat's off to you. You started something on the ground floor, and you've built something unique, and so congratulations to you, and keep up the work.
Thank you.
And it's been a great pleasure to meet you.
Likewise, and look forward to keeping in touch.
Thanks very much, Radha. Appreciate it.
Bye. Take care.
If you enjoyed this podcast, please do me a favor and hit the like button and subscribe to receive future episodes. You can find more interviews, articles, and information on sustainable and responsible investing at our website, sri360.com. If you enjoyed this interview and you would like to read more lessons learned from world-class SRI investors, get yourself a copy of my book, Sustainable and Responsible Investing 360 Degrees. It's a must-read for anyone wanting to know more about investing for positive social, environmental, and ethical impact, all with market returns. These are the stories and tactics of those leading the way as sustainable and responsible investing goes mainstream. Sustainable and Responsible Investing 360 Degrees is now available in hardcover, ebook, and audiobook format wherever books are sold.